The next magic barrier is $100. I don't think silver will stay long at $100 either. It might be rejected a couple of times. It's not a resistance as such. It's just a nice round number. Gold is also going up, but as I have made clear for quite a while, silver will go twice as fast as gold in coming years. Now, the gold-silver ratio has gone from over 100 to about 50 now. The long-term ratio is probably going to be around the 15 level initially, but I wouldn't be surprised to see even lower than that being a natural level. But now I think the demand is of such magnitude and the supply so minuscule.
The reason silver is going up and the reason gold is going up and the reason they're going to keep going up is not good news. This is a reflection of bad things that are going to happen, not just bad things that have already happened, but it's also going to put upward pressure on long-term interest rates, which are also rising. Yields on the 10-year and the 30-year treasuries are now back above where they were before the Fed cut rates by 75 basis points. But we're going a lot higher.
Silver is projected to surge far faster than gold as the gold-silver ratio collapses from 50 toward historic norms. With gold targeting $10,000, a return to 15:1 implies silver near $666. While a 10:1 ratio points to $1,000. Egon von Greyerz argues this represents only the early phase of a historic monetary reset, where silver's leverage delivers outsized, potentially life-changing gains. Peter Schiff warns that the relentless climb in gold and silver is not about growing wealth, but a clear signal of approaching economic upheaval. He argues markets are bracing for a crisis far worse than 2008 or the pandemic, with precious metals acting as forward-looking indicators of an accelerating systemic breakdown. Now, we present the clips from Theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The precious metals are continuing their explosive rise as we have forecast during much of last year. And some people might remember that back in December, we made it clear to investors that next move is a move through the $50 line for silver. Now, we had $50 in 1980. We had $50 in 2011. Both times they were rejected and silver came down dramatically. And now we went to $50 for the third time in December, and we were very clear that this time we're going to break through. And I also made it clear that we're not going to break through slowly, but we're going to go through 60, 70, 80, 90. And that's where we are now. We are around 90. And of course, the next magic barrier is $100. I don't think silver will stay long at $100 either. It might be rejected a couple of times. It's not a resistance as such. It's just a nice round number. And that number will be broken too, because the fundamentals are so much in favor of silver. We have a physical demand that has widely outpaced the physical production of silver. In the last 5 years, we've had a deficit every year that's been made up in the futures markets, primarily. Now, this is the big problem for silver. The outstanding paper contracts in London and in New York are of such magnitude, they cannot be fulfilled by any existing stock in silver because there isn't any stock of any significance. Therefore, this is a fundamental change. Some viewers might remember the late 1970s when silver quickly climbed from a few dollars up to $50. This was primarily a speculation by the Hunt brothers, and of course the market could quickly sell enough paper silver to crash the price, and it didn't stay long at $50. This time, any selling that is attempted by bullion banks fails, and we've seen many times being sold in the evening, and within a few hours it's back up again. And this has happened last week again. Friday evening was sold off and then quickly went up to $90. I think we're quickly going to see $100 and more already in the Far East and in Australia, like the Perth Mint, so selling now silver at over $100. So the price in London and in New York will have to follow. So what does that mean for the ordinary investors? Well, it clearly means that silver is just starting the move. And we are going to see, as I have stressed many times, we are going to see multiples of the current price. Will it correct? Of course, silver always corrects, But this is not a normal market because it's now turned into a physical market, which is what it should always be, rather than manipulation that we have seen in paper markets. So physical demand has gone from 10% of production to now 50% in the last year. That is a massive increase in demand, obviously stemming from solar panels, electric cars, electrical products, electronic products, and also, of course, from defense contracts. Every missile uses quite a lot of silver, and all other electronic products and weapons use a big amount of silver. Now, so the demand is there on the physical side, and the demand is there on the investment side, and the production just isn't there to satisfy this demand. We've had deficits for the last 5 years. Those deficits are going to increase. This is why there will be constant demand for silver, and it is probable in the next year or two that there will be failure in some markets, whether that will be in the London market and some bullion bank will go under, whether that will be on COMEX, we don't know. But the risk is very high. So it is obviously absolutely important for investors to hold nothing but physical silver. Buy physical and hold it outside the banking system, not within the banking system. Don't buy ETFs, don't buy any futures. Hold physical silver and keep it in a safe storage, in a safe vault like we do for clients, and keep it outside the banking system. Now, there are, of course, many other factors that influence the price of the metals. Gold is also going up, but as I have made clear for quite a while, silver will go twice as fast as gold in coming years. Now, the gold-silver ratio has gone from over 100 to about 50 now. The long-term ratio is probably going to be around the 15 level initially, but I wouldn't be surprised to see even lower than that.
Silver has decisively broken the historic $50 barrier, surging beyond $90 as $100 rapidly comes into view. Unlike the speculative spikes of 1980 and 2011, this advance is driven by a genuine physical shortage that paper markets can no longer suppress. Years of expanding industrial demand, from green energy, electronics, and defense, have pushed consumption to nearly half of global supply, creating persistent deficits. As physical inventories shrink, the paper-to-metal disconnect is breaking. With gold projected toward $10,000 and the gold-silver ratio compressing toward 15:1. Or even 10:1, silver is mathematically positioned for a powerful revaluation, potentially reaching $6 to $1,000 per ounce in a historic monetary reset. Let's get back to the interview.
The reason silver is going up and the reason gold is going up and the reason they're going to keep going up is not good news. This is a reflection of bad things that are going to happen, not just bad things that have already happened, but metals are forward-looking to bad things that are going to happen. Now, bad things are going to happen to people that own Bitcoin. They're going to lose all their money, but that's not what I'm talking about. I'm talking about much more significant bad things in the U.S. economy that are going to impact average Americans in a very profound way and in a very negative way. And it's going to be way worse than, how things were during the 2008 financial crisis or during the COVID pandemic. I mean, the COVID pandemic, yes, it was a pain in the ass because you couldn't go to restaurants, you couldn't travel. But remember, people had it pretty good during the pandemic. They didn't have to work. They could stay home. A lot of people just stopped paying their rent. They didn't have to make payments on their student loans. They got all this money coming in from the government, and they went on Amazon and they shopped and they bought things. And yeah, I mean, people did go to, parties, and they found ways, to entertain themselves, despite all the masking and the stigma of going out. But people generally had a good time during COVID. Kids didn't have to go to school, right? Teachers didn't have to work and go to school, right? But what's about to happen is going to be significantly worse, because even if you get a check from the government, it's not going to buy you very much. That is the problem. We are on the verge of a massive collapse in the dollar. In fact, the dollar really tanked today. The dollar index dropped to its lowest level since October, right? Dollar index was down just about a full percentage point. Looks like we closed around 97.4. The U.S. dollar is about 0.5% away from a new all-time record low in the Swiss franc. And I believe we're going to crash through that next week. This is a sign. The world is losing confidence in the U.S. dollar, and they are buying the Swiss franc. Now, obviously, they're buying gold. even more than the Swiss franc. And now they're buying silver. That's also helping to power commodities. Oil was up almost $2 a barrel today. Many of the oil stocks are at new 52-week highs today. They are forward-looking. I've been saying on my regular podcast for months now, oil is bottoming. In fact, we couldn't go significantly below 60, even on the Venezuela news. And even with all this new Venezuela oil being dumped on the market by Trump, prices held. And we're about to explode. And it's not just oil prices that are going to go way up. It's going to be agricultural commodities. This is a huge commodity bull market. All of this, of course, is going to bleed into consumer prices. But not only is it going to force consumer prices that are already high and moving higher, but they're going to go up even faster. But it's also going to put upward pressure on long-term interest rates, which are also rising. Yields on the 10-year and the 30-year treasuries are now back above where they were before the Fed cut rates by 75 basis points. But we're going a lot higher.
The powerful surge in gold and silver is not a victory lap, but an early warning of a crisis far more destructive than 2008 or the COVID era. Unlike the pandemic, which was masked by stimulus that sustained spending without real output, the next phase will center on collapsing purchasing power, where government support loses effectiveness. Markets are already signaling stress. The U.S. dollar index has slid to multi-month lows and is nearing historic weakness against the Swiss franc, reflecting eroding global trust. At the same time, long-term Treasury yields are rising despite rate cuts, showing resistance to Federal Reserve control. This breakdown is accelerating a broad commodity supercycle across energy and agriculture. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.